I think that's quite possibly not the right question to be asking at the moment. I think we'll get a fairer idea of whether that was a fair valuation or whether Bharti have paid too much in 2 or 3 years' time. What Bharti have paid for is entering into a new marketplace with significant growth potential. That's what the deal price is all about. Whether Bharti can take advantage of that potential, we'll have to wait for 2 or 3 years. If it can, and if it does take advantage of that, then yes, it will have been a good price to pay. If not, and if it struggles in the same way that some other investors have done so in Africa, then yes, it would have paid too much. Well, I mean, from a Bharti perspective, the numbers stack up so that yes, there is huge potential. Penetration is low. Penetration is around mid 40% mark in Africa, lower in sub-Saharan Africa, lower in many of the markets in which Bharti is acquiring interests in. In fact, if you take away multi-SIM ownership, single user penetration is around mid 30%, so quite similar to India. So from that point of view, yes, huge opportunities present themselves in Africa. There are challenges as well, and many of those challenges are similar to those that Bharti faces in its own domestic market, one of which is intense competition, and another which is expanding into rural areas, and the ability to build and create an efficient business model that allows you to extract as much revenue as you can from low revenue generating customers in rural areas. I mean, there are many similarities between the challenges that Bharti will face in Africa and those that it faces in India. So yes, it's entering 15 new markets at once, but equally Bharti can say with some justification that they already operate in a number of very different circles and regions within their own market. But there are 15 different regulators. That's not the case that Bharti face at the moment. Dealing with 15 different regulators with very different agendas, 15 different governments with very different agendas, 15 markets with different political dynamics is going to be a challenge that is unique to Africa, and that Bharti will have to get to know not just the market dynamics of those 15 countries, but also consumer behaviour patterns, which will be different from country to country. The countries in which Bharti Airtel is moving into are very, very different. They span a large part of sub-Saharan Africa, from the east coast of Africa right through to West Africa. They will all have their own differences, and Bharti will have to spend some time getting to know those markets. Bharti will certainly look to reuse an existing business model that works very well in India, and those models that fit into the African marketplace it will look to reuse. I don't necessarily think it's going to do so overnight. It won't necessarily be able to do so overnight. I think what Bharti will look to do, first of all, is to get an understanding of its new assets, to possibly to build an HQ in Africa, something that Zain never really did and suffered from, possibly in Kenya, and look to rebrand. It will have to do so. It will have to translate its very strong Airtel brand in India to Africa, a brand where it's not known. So I think a lot of its immediate time will be spent over rebranding. Well, I think Bharti will look to add network sharing as a concept into Africa. It's a new concept for Africa. It's been introduced into Nigeria fairly recently, where the regulator has been very supportive of network sharing as a concept. So we'll look to do that in other markets. In a market such as Democratic Republic of Congo, it might fit in very well, where penetration is extremely low in that particular market. There are wide rural areas which are completely unconnected, and there are a number of operators, 6 operators in a market which has huge potential for growth. Bharti may look to a network sharing agreement with one of its rival operators in that particular market. Managed services is an area in which, funny enough, Zain themselves were very proactive over the last 12 to 18 months in Africa, but I think it will look to continue leveraging its relationships with suppliers to build up managed services, but also to outsource back office functions. The Kenyan government is currently being very proactive about trying to instill Kenya as something of an outsourcing hub. Could Bharti perhaps leverage that to build up its own outsourcing model? It would probably look to do so. And then the other area is around pricing. I think Africa, although ARPU is low in Africa, it is not as low as in India, and I think there is probably some elasticity for Bharti to look to lower prices, especially around mobile data services. So I think we can expect to see more competition around pricing.